every good idea for the past decade has been a digital network. And when they get to 200 billion in market cap, they're pretty hard to stop. So our conclusion was, this is like Facebook for money or YouTube for money. And we jumped on it. Today, it's $1 trillion digital network. It's the fastest growth to $1 trillion of any network in the history of the world. Took 12 years. Google took 22 years. Amazon took 24 years. Apple took 42 years. Microsoft took 44 years. Those are the only firms that have ever done it. Bitcoin has done it. And so the paradigm shift is digital monetary network, a solution to everybody's problem, and COVID lockdowns, everybody's got a problem. You put those two things together, you have to think different. And that's why we did what we did. Right now, I think it's $1 trillion dominant network that's 100 times bigger than the next best thing like it. You know, it's about as likely that Bitcoin disappears as it is that Google disappears in 36 months.
What are your projections, or what is your overall perspective on, let's say, Bitcoin anywhere 5 to 10 years out in terms of the, and I assume you fully anticipate holding your position and or adding to it here over the next 5 to 10 years.
My view is Bitcoin is the apex property of the human race, which means that it's the last thing you will sell. You know, if you had a block of Manhattan, you would hold it a long time because you thought Manhattan's always going to be valuable, but Bitcoin's better than Manhattan. And so it's the ultimate long duration asset, or in other words, an institutional grade treasury reserve asset. You ought to buy it and hold it. And if you ever need cash, just borrow against it, just finance it. The native yield of Bitcoin's been 200% a year for a decade. You could borrow money and pay 5 or 10% interest and borrow infinitely forever and have your debt to equity ratio fall, right? As long as that trend continues. And it's continued for 10 years until this year when it went to 400% appreciation. And that's because Bitcoin's a fire in cyberspace, a monetary fire. How do you feed a monetary fire? With money. And what happened this year? Well, two things. The cost of holding US dollars tripled. And so that's the macroeconomic driver. And the other thing that happened is that Bitcoin burned into the public markets. And look at companies like mine. We went to the market, we borrowed $1 billion at 0% interest. We bought Bitcoin yielding more than 200% interest. How many times would you actually trade $1 billion at zero for 200% yield? When do you think I got to stop that?
Well, what do you think will play out in terms of the level of volatility of Bitcoin's price?
It's falling already. I think the people that lived the last decade, the first decade of Bitcoin, have been scarred by their experiences because they had a very volatile first decade. But I think that those are misleading because the system has evolved. Institutions have come into the marketplace. And since March of 2020, it's totally different asset class. If you look at the chart since March, it goes up 50%, down 25%, up 50, retraces 20, up 60, retraces 25, 30, up 50, retraces 25. And so it's actually simply growing from 4,000 to 60,000. The way I explain it to people is if you studied LeBron James's career from age 9 to 18, he was talented but volatile. But it would be a mistake to extrapolate from the first 9 years or first 10 years to the next 10 years. From age 18 to age 28, LeBron James was the greatest athlete in the sport and not volatile at all. Not volatile, except in a good way. If you're staring at a basketball court, watching stuff move, he's actually making everything happen. He's the volatile game maker that's destroying everybody. But it's not a bad volatility. The bad volatility, you know, you want to get rid of volatility, put a lump of rocks on the basketball court, you have no volatility. So I'm not terribly concerned with the volatility. I think there'll be accelerations and pullbacks, but the institutions are collaring it on both sides. The capital is not consumer leverage capital, day traders. The capital right now is insurance companies, big public companies. We're coming in to buy it forever. We're not like, ask me when I'm going to sell it. Never. I'm not going to sell it ever. And so the narrative has rotated. Long-term institutional deep pockets, and the asset class has matured. And of course, the law of large numbers say $1 trillion entity has more inertia to it than a $100 billion entity. And what do I expect to happen? I expect it will grow aggressively toward gold, and it will flip gold, and then it will demonetize gold and subsume gold. And probably it'll be first $10 trillion and gold is 10 trillion. Then it'll be 20 trillion and gold will be 5 trillion or 4. And gold will eventually become an ornamental metal. Bitcoin is going to suck the monetary energy off of negative yielding bonds. Tom, I ran a survey on my Twitter. I got 65,000 responses 2 days ago. I asked people, where did the money come from you used to buy Bitcoin? 49% is stocks, 20% is gold, 10% is bonds, 19% is property. Basically, stocks are going to be negative yielding if you're value stocks because they can't keep up with the rate of monetary expansion. Everybody knows bonds are destroyed. Ray Dalio just told the world they're all negative yielding. By the way, he thinks they're negative yielding versus CPI. The real point is they're negative yielding versus the cost of capital or the rate of the monetary supply expansion, which is like 15 to 25% a year. They're screaming value destroyers. So I think that Bitcoin goes to 10 trillion and it goes as fast as it can, and then it grows 50, 60% a year toward 100 trillion.